What does the future hold for gold and silver? In this era of economic uncertainty, these precious metals are making a compelling case for themselves. Florian Grumis from Midas Touch Consulting suggests that gold is being remonetized after the end of the gold standard in 1971. Central banks and sovereign wealth funds, such as Azerbaijan's oil fund, are steadily increasing their gold reserves. He predicts that gold prices could surge to $9,000 in the long term and between $4,000 to $5,000 within this year despite short-term volatility. What's driving this? A lack of faith in fiat currencies, the West's high debt levels, and China's moves to increase gold reserves to support the yuan, to name a few factors. But what about silver? Currently undervalued, with a gold-to-silver ratio exceeding 100 to 1, silver could be on the brink of a breakout. According to Florian, silver could adjust to $40 to $50 by summer due to increased industrial demand and a persistent market deficit. Positive signs include a reduction in Chinese silver accumulation to an 8-month low and a trend of retail investors buying more. However, tense US-China trade negotiations could temporarily slow gold's momentum. Yet Florian believes the primary trend remains bullish due to market expectations of interest rate cuts and economic stimulus from central banks. Let's shift focus to mining companies. Major gold and silver mining companies stand to benefit from higher commodity prices, especially silver mines with potential for high profits if prices adjust. Florian recommends keeping an eye on companies in Canada and the United States with large projects in safe areas, such as Silver Tiger Metals in Mexico. Of course, there are risks to monitor: high volatility in the gold and silver markets in the short term, and US monetary policy, as well as China's moves to support the yuan with gold. In conclusion, the gold and silver markets are on an upward trend due to fundamental economic and political factors. This includes the accumulation of gold by various countries and geopolitical tensions. Investors should watch the movements of silver, which could catch up with gold, along with opportunities in undervalued mining stocks.